Hi, this is Anthony Parent, a tax attorney, one of the partners here at Parent and I'm founder of IRSMedic, and I'm here today to talk to you about the new IRS 2012 Offshore Voluntary Disclosure Initiative. And what the purpose of this video is to kind of explain how we got where we are right now. Because it used to be, there was a thing called secrecy. You used to be able to take your money as a United States citizen and say you want to go on vacation to the Cayman Islands or yodel across the Alps. And it was a little bit of a gamble, but chances were if you deposited your money into these foreign accounts, the IRS would never find out about it. Your money could grow tax-free. You could tell the fellas here to give them a polite and this mutual contempt between the IRS and taxpayers was I guess a harmonious stasis. So what happened? Well, you ever think about the trouble that diamonds cause? High credit card balances, low funds in your checking account, crippling worries if you spend enough on a particular ring, and the sinking feeling that perhaps you are a sucker buying something where the supply is artificially limited. And now there's one more thing. Diamonds cause the total breakdown of something that used to mean something. Banks and secrecy. How? Well, remember those diamonds? And remember those secret Swiss bank accounts? Remember having nothing or little to worry about? And it's true until you want to bring that money back to mom and apple pie. Because you got a problem. Oh yeah, customs. Kind of hard to bring a whole bunch of cash in, kind of hard to bring a whole bunch of gold in, kind of hard to just wire money to a bank because that will certainly alert the IRS. So some people had the idea that odorless condensed diamonds are perfect for smuggling. And it was a perfect plan until it wasn't. While Customs JFK, this guy was caught. And he worked for UBS. And he sung like a bird. And he continued to tell all the details on UBS in this criminal enterprise between the Bank of UBS and U.S. account holders. And essentially what happened was UBS was forced to give up names, and the IRS even forced Switzerland to change its laws, which ended much of the bank's secrecy. The IRS learned a whole bunch of great information, and they used this with surprisingly effective results. And not only that, the IRS now has new laws, and so much so that every bank in mostly every country is so fearful of doing business with any U.S. taxpayer that a lot of banks simply won't do business with U.S. citizens anymore. Now, in 2009, we had the first offshore initiative, and that created a 20% penalty on the highest account balance. And that's really been the worst of it. Then in 2011, they increased it to 25%. And additionally, all taxes and interest had to be paid. Together, both of these initiatives brought in $4.4 billion, which is what these guys spend in half a day. Now there's a new initiative, and for those kind of guilty, for those who definitely were involved in some sort of evasion, there's going to be a 27.5 penalty, the FBAR penalty, and that's what's assessed on the highest aggregate balance year. And for a lot of folks, I see that's 2006, 2007. Those tend to be the highest balance years. There is an option, though, for those not so guilty, and this is really for folks who maybe were born overseas, inherited accounts, never really transferred money from the United States to these accounts. These accounts were there, and they really weren't that aware that there was this filing requirement, or that there was even universal tax jurisdiction on all their income earned everywhere it is. There's the opt-out program, and there's a good chance to get lower penalties on that, and typically the taxes aren't, the tax bills unreported aren't all that substantial. Here's the thing, they know, and if you haven't been called in for an audit yet, Luck does not last forever. The IRS is going after who they deem is high income earners right now for audits to try to uncover this. So if you skated by so far, we do have the new 2012 program. You might want to think about getting it in. And now also follow this channel for more updates on the 2011 opt-outs as they become available. One of the most common questions I have, people want to know for sure whether they should opt out or not. And really there's just simply not enough history right now for us tax practitioners to give a real adequate answer. And we'll have more details as they come available. And let's see here. And if you want to talk now, one of the things that is very important is not to talk to your CPA about your offshore accounts, and it's pretty critical because the IRS can force your CPA to testify, and your CPA has to say everything you said, and that could be really important to show what your state of mind was. So only talk to an attorney. Now, if you want your CPA present, no problem, but talk to the attorney first, and then we can conference call him in. And thanks for watching, and please, any questions, put them down in the comments. I'll be updating this as we go along, and thanks for watching.